Hi, and welcome to this week's video looking back at the major stories that have impacted the market so far in the last few days. And we're going to start with the Great British Pound and a little bit of positivity for the pound for once in the fact that at the start of this week, GBP against the US dollar rose to 1.21, a bit of a bizarre twist. Now, normally a reduction in inflation is a good thing, is it not? Well, quite the opposite it seems for the US dollar. We started the week on a strange note for the dollar. Strong US dollar all year so far this year, despite facing similar very high levels of inflation in the US as we are in the UK and Europe. Now, despite the fact that inflation has been double figures, has decreased slightly in the States, we're seeing figures of 7.7% last week versus 11% in the UK, where it's still believed to be rising. What is the reason for that? Well, it's clear that it's been strong this year for a couple of reasons. Certainly there was a quicker return to productivity in the US than in the UK and Europe. They had fewer lockdowns, for example. Certain states didn't lock down at all, and that helped their productivity numbers. But again, that falling inflation versus UK would think would lend some more support to the US dollar. End of last week, 118. Start of this week, 121. And in fact, still above that level. One theory for this is the Fed may slow the cost of borrowing increases down. Now, there was a speech by the head of the Fed this week, and actually it was quite tame in that sense. So if they slow the cost of borrowing down, it's possible more people will borrow during a difficult economic time, which would add to a nation's overall liabilities, obviously. Now, conversely, in the UK, mortgage lenders are actually pulling products away from the market. It's harder to get a mortgage. It's harder to be qualified by a lender to be able to afford things currently. Now, banks and lenders are worried that people and borrowers may not be able to afford payments down the line if interest rates go up in the UK. So are we seeing a bit of divergence of economic thinking between the two nations? It seems to me that keeping borrowing down, certainly as indicated by the sterling this week, may well be a prudent policy during this time. Okay, for our second story, we're going to stick with the US dollar a little bit longer, and the fact that the US dollar suffered its biggest fall in 12 years this week. More bad news for the dollar. First 10 months of this year, the dollar index was up 16%, which has been its highest gain since 1985. However, in November, it fell by 5%, which is its biggest drop in a month since September 2010. Now, USD GDP for the third quarter grew 2.9%, which was above analyst expectations. And as I mentioned just earlier, those tough statements in the speech from the head of the Federal Reserve this week. What was the result of that? Well, the dollar index fell. Stocks went up, especially tech stocks, which are more liable to sort of government policy swings. And gold and crypto were also on the up. If we take a look at the S&P, this broke the descending trade line after these figures came out. Now, fears of recession scenario, perhaps easing. Looking at the volume figures, big players coming back in, well, based on the volume indicator that we can see, slowed the rate of decline and reversed it, basically. Now, we've got a potential, of course, this time of year, December, of a Santa Claus rally. Maybe the Bulls have a chance to build on the success of recent few days, despite ongoing but lessening recession fears in the US. This time we're going to come away from the US and we're going to have a look at China and its ongoing issues with COVID, and particularly how energy markets are reacting to the COVID surge that we seem to be seeing again in China. Now, reports indicate that China is seeing approximately 40,000 new cases per day currently. Whether those figures are 100% accurate, of course, nobody can be 100% sure. We've also seen protests about the zero COVID policy rocking the country, with open dissent and calls for President Xi, to step down. Quite unusual in a country such as China. A lot of this is the backdrop of falling property prices, which are a traditional tool for domestic Chinese investors. This seems to be one of their major concerns. Now, we did see a decline in oil, down about 3% earlier this week. It does seem to have currently recovered from that. It's been up the last couple of days, but certainly a lot of analysts saying that fall that we saw at the start of the week could well be due to concerns over the spread of COVID in China and thus possible lower demand. And we know, obviously, China is a massive user of oil and a massive producer. On the flip side of that, though, natural gas was showing no signs of similar concerns or weaknesses, with prices pushing higher throughout this week. I think it's still up in the air a little bit what is going to happen in terms of a market reaction to a further COVID surge in China. But it's certainly something to keep your eyes on, and certainly the sort of thing that makes you make sure you use your risk management techniques. Okay, so for our final story this week, I'm going to change tack slightly again. I'm going to have a little look at the crypto markets. And probably the most positive bit of news for some time this week for cryptocurrencies is that Brazil is looking to legalize cryptocurrencies for use. Now, Bitcoin is not becoming the legal tender. That's like the position in El Salvador. It's not quite the same. The Chamber of Deputies approved a regulatory framework earlier this week that legalizes the use of crypto as a method of payment. So it only really needs now the president's signature to move this forward and for the country to be able to start using a variety potentially of different cryptocurrencies. It also established rules for the operation of crypto exchange platforms as well as storage and management of cryptocurrencies. Now, we obviously know there's been some pretty bad news in the crypto markets, and this positive news, the first bit we've had for a while, really pushed Bitcoin and others into a bit of a bullish impulse. We saw Bitcoin, for example, rise above 17,000, which is quite a psychological level, but it did fall back earlier in the week. Currently, we are above that 17,000 mark again, so that's something to look out for. Now, it's worth noting, looking at the charts, that the B2C rollback was 50% of the AB impulse, so it only sort of came back half of its gain, and 16,300 works as support again. Could be in the sense that a little bit of cautious optimism is returning to the cryptocurrency markets after the shocking news of FTX, and of course we've also seen the news about BlockFi this week. So will that optimism last much longer? We can't be sure. Is there more bad news around the corner? That is a decent possibility. It's a very volatile market. Cryptocurrencies, very, very volatile. If you do get involved with them, risk management is key. We wish you luck with your trading for the week ahead. Bye for now.